go.
So, as many of you guys have heard, there's been some changes through CMHC this week in terms of their lending rates and what they charge. So, what I want to do here for us and for our team is to bring in Diana Lee with the Mortgage Minds, who is one of our preferred mortgage brokers, and to explain a little bit of some of the changes for you, so that you as the consumers know exactly what's going on. Give her.
Great, thanks, Will. In recent news, CMHC came out and they announced that mortgage loan insurance premiums are on a rise. And it's coming into effect March 17th. So, what does that mean? With home buyers, those that put less than 20% down, they have to pay mortgage loan insurance. Whether it be CMHC, Genworth, or County Guarantee, they're mortgage insurance companies. So what that means is we have a percentage we charge for mortgage based on the loan to value. So what's the loan to value? You buy a house, you put 5% down, then 95% loan to value is the mortgage. So with that, based on the loan to value, we have our set of percentage rate that we charge the client, and we actually tack it on the mortgage and we finance it through. So with the recent changes, I wanted to kind of show you a couple of the percentage difference here. So currently, if the client puts 5% down and you get a 95% mortgage, loan to value mortgage, currently we're charging 3.6%. So in numbers, that's $10,800, right? On a $300,000 mortgage. So come March 17th, you're going to see that premium is being increased to 4%. So now the client is being charged $12,000.
Got it.
So that's a difference of $1,200 in insurance premiums. Now, really, when you look at it in a mortgage perspective, it's only a difference of $5 to $6 per month in a payment, right? But these changes, they are coming, and you can actually see that as you put more down, so 10% or 15, the percentage is going from 2.4 to 3.1, and actually with 15%, it's going up a full percentage.
Right.
So when you're actually putting a little bit more, you're gonna actually see a difference of about a $2,000 difference here, and about a $3,000 difference here.
So at 15, it gets pretty substantial versus anything else.
That's right, yeah. So, these changes are coming. It's really important to get pre-approved, talk to a mortgage expert, understand and educate yourself about these rate changes, what scenarios you can play with, and of course align themselves with a real estate professional like you.
So then, now the deadline is March 17th?
That's right.
Okay, so what that means then basically, that we all understand, is that as long as they have an offer to purchase on a property submitted to a bank by March 17th,
that's right,
then it's fine.
Yeah, let's go March 16th.
March 16th?
That's right.
That's right. So if it's March 18th though, that's when the extra $1,200 up to $3,000 comes into play in terms of being tacked on the mortgage.
That's correct.
And in terms of monthly payment perspective, that's about, you said $5 to $8 a month?
Yeah, it ends up being about $5 to $6 here, about maybe $8 to $12 here, and about $13 to $15 here.
Got it.
Yeah.
So the scoop is that if you're planning on buying in the spring market, this is going to affect you. You're going to see that sort of stuff. So in a lot of years, a lot of people wait till April or May to start getting the ball rolling. This year, you don't want to do that. This is one of those years that you want to get in, see someone like Diana, get pre-approved, because a pre-approval point is going to be the start of it, as well as then let's get the home shopping process going so we can get you in there before the rates go up. From that perspective, that's all we have to say from Hickey & Associates and Diana Lee.
Thanks very much.
Talk to you soon.